I want to thank Michael King, my co-host here, from professor at the Ivey Business School. Very happy to have the working with Ivey. This is the first time we've actually done a major event with Ivey, so we're very proud of the success of this. And thank you, Ivey. Thank you, Mark. And I also should mention my boss, Tiff Macklin, who's here, will be speaking later, who's the chair of the Global Risk Institute and, of course, dean of the Rotman School. And I want to thank Bank of Nova Scotia as well. I think we have quite a few Scotia people here today, but they made this facility available to us, and it's obviously everybody, I'm sure, agrees that it's a fantastic facility. So wonderful that we're here. The agenda has held pretty solid. We did have one last-minute change in the afternoon in the FinTech side. So we now have at 2:15, we've got Sean Rose coming, Executive Vice President on Digital Banking here at Scotia. So we've subbed in a FinTech person who is an ex-banker for an actual banker who works in FinTech. So, you know, I think it'll be equally as interesting. But we have speakers today coming from, you know, all over the developed world, the major financial capitals. So we're very pleased. I'll talk about them just briefly in a few minutes. But I want to give you I have to give you an advertisement. What kind of a salesperson would I be on the Global Risk Institute? So the Global Risk Institute is a research institute. It's formed 2011, 2012. Really came out of an idea that a number of people had, including Governor Mark Carney and Minister Jim Flaherty, that something good should come out of the financial crisis, because not a lot of good came out of the financial crisis for those of us that had to work our way through it. But this is one thing that Canada had done pretty well through the financial crisis. The banks never took any equity support from the government, unlike many other countries, and that we should seek ways to continue to build on that strength at Canadian industry, Canadian financial services, Canadian academic institutions. And so that's really the purpose of the Global Risk Institute, and really why we're here today, to continue to advance that mission. We work with most of the financial institutions here in Canada, the large ones. In order to be a member, you actually have to have a chief risk officer, so that's sort of our criteria. So that sets the size. We have a few international members, and we're starting to push quite hard now into New York, with quite a number of events in New York this year, and gradually I'm working with people like Richard Goulding, who will be a speaker later today, on London as well. So the mission is to take that model that we have here in Canada that seems to work so well, and see whether we can strengthen it by working with people outside of Canada, and also hopefully share information that we have. I wanted to talk about the themes of the members, just to get us started. That we do surveys at the Risk Institute in terms of what are our members most concerned about. So this would really represent the CRO and CEO view of risks. And this is a 2015 survey compared to a survey we just completed early 2017. And what's really interesting about this is risk changes over time in the perceptions of your senior management at banks and pension funds and insurance companies and asset managers. You can see that 2015, risk culture was at the top. And it should be no surprise that back in 2015, the regulators were heavily pushing risk culture, had been for the last couple of years, right up to then. But what's advanced now in 2017 is not that risk culture isn't important, but of course, we're now seeing a lot more, the top two in 2017 being technology, both the bad side of technology, which is the cyber risk, and the positive side of technology, which is disruptive technology. The other one that's interesting is that climate change, well, we had to actually stretch the list down in 2015 down to number 12 to find climate change. It actually has moved up now to number 8. So we look at this very carefully to decide what work to do with universities and others in terms of the papers that we issue. So you would see quite a few papers in the last couple of years on cyber, on technology, and on climate change, as well as some of these other issues that are relevant to the people that work with us. This is just another view of it. This is another survey that was done. And you can see that, because everybody will go, well, where's housing on this? Like, where's housing? But anyways, it does show up. Consumer debt is a concern. And where's the Brexit and President Trump? Where does that show up? Well, it actually does show up, a geopolitical risk prevalence. But you can see the CROs believe that those are risks, and they're up near the top, but the impact to them, which is probably the impact in their lifetime anyway, over their careers, is really more coming from things like cyber risk and potentially the housing market here. So it's not as if they're immune to these issues. When they put a more shorter focus on it, these things that you would expect, that you see in the press every day, definitely do come up. So, turning to the way I teach my course, I will tell you there are 3 ways banks make money, because we're here to talk about banks and financial services. And my old boss is here, and I'll be introducing him in a minute, so he will might have something to say about that. You never know. But really, they make money in 3 different ways, and we're going to hear about that a lot today. They make money through the net interest margin. They borrow at one rate, they lend at a different rate. That's what banks do. That's a classic and that's the largest business that banks have. They charge fees. And by the way, I bet you everybody in the room knows that they charge fees, because fees have become more important for banks, especially in these low interest rate times. And to some degree, they buy low and sell high. We're sitting in a building that was sold at quite a significant profit at one point by the Bank of Nova Scotia, and those generate fees. Now, the Volcker Rule and some of the regulations have cut into this a little bit, but it's still an important part of what banks do. They hold a lot of assets at cost, and they're able to sell those at a profit. So that is another portion. There's really not much else they do. So it's actually a fairly simple business model, simple in design, but very complex in putting it all together and operating it. And so today, what we're going to address, not in microcosm of how not in the micro way that how they make money, but we're going to address 3 different basic issues. One is, what's the future operating environment look like for banks and financial services companies? Is it positive? Is it negative? And we'll see what the speakers have to say on that. We're also going to look at one of the critical resources of banks and financial services companies, people. So some of the speakers are going to talk about people and how important those people are and how that's changing and how that needs to change. And then finally, of course, technology. These aren't ranked in any particular order, but those are the 3 really concepts that we're going to be focusing on today. And we've got some great speakers coming from both 2 speakers up from New York who are experts in what's going on in the U.S. financial services sector. We've got a former CEO, recent. We have a chair of the risk committee, Mr. Macklem of Bank of Nova Scotia. We also have, then we bring in some fintech people talking about artificial intelligence, talking about banks working with fintechs. And then we also have a former chief risk officer coming up to wrap it all up. In between, we've got the guys from Treasury coming in to tell us what it all means, because Treasury, as I learned in my career, is the sort of central clearinghouse for everything that a bank does. And so we're going to hear from Andrew Stewart on the Treasury issues. In terms of question and answers, so we are going to, we hope every speaker will allow questions and answers, and that's the plan. There's going to be 2 microphones in the room, and you do have to use the microphone given the size of the room. But there's another system called Slido, and if you go on your browser and type in Slido, S-L-I-D-O, it'll open up a website, and then you enter the code event FBFS.
Future Banking and Financial Services.
Okay, FBFS. And then you're allowed to type in your question. That question will actually be sent to Michael King, and Michael will then curate these questions. And if it's the question I always ask, what was Elvis Presley really like, he will not ask that question. But if it's something relevant to the day, then it may pop up to the top. And of course, there's a ranking of these questions based on the number of people that want to hear about that question. So Michael will then pose those questions. You can also put up your hand as well and ask questions in the old-fashioned way.